So an alphabetical list of the adjusting trial balance for North Account Rentals, Country Rentals, sorry, after its first year of operation ending March 31st, 2017 is shown below. So this is alphabetical. This is actually what you're going to get on your final exam. Similar to what you got on your midterm. The first thing that I would recommend doing to try to make sure you get this right is I would actually go ahead and just make sure you know what each account category is. So why don't we go ahead and do that? So what is accounts payable? So it's we'll just stick to the five most basic. So yeah, it's the liability. Accumulated depreciation. No, it is not a liability. It's an asset. It's a contra asset. Advertising expense. Building.
Asset.
Cash.
Asset.
Depreciation expenses.
Expense.
Furniture.
Asset.
Interest expense.
Expense.
Interest payable.
Liability.
Janitorial expense.
Expense.
Land.
Asset.
Long-term note payable.
Liability.
Notes receivable.
Asset.
Office salaries expense.
Expense.
Office supplies.
Asset.
Office supplies expense.
Expense.
Brand name.
Asset.
Prepaid advertising.
Asset.
Rent revenue.
Revenue.
Rent receivable.
Asset.
Salaries payable.
Liability.
Utilities expense.
Expense.
Capital.
Equity.
Withdrawals.
Equity.
Assume all accounts have a normal balance. So these will all be different debits and credits. So maybe we'll just quickly review our normal balances. So we have assets, liabilities, equity, revenue, and expenses. What is the normal balance of an asset?
Debit.
Liability,
Credit.
equity, credit, revenue,
Credit.
expenses,
Debit.
debit. So just setting ourselves up, so I really recommend on the exam, just going through, taking your time, getting organized. It'll make your life a lot easier as you get into it. So again, instead of calculating the capital balance, we're just going to go through and do a income statement. And a statement of changes in equity. So this is North Country Rentals. Income statement. For year end March 31st, 2017. So, what goes on to our income statement? Revenues. How many revenues did we have? Just rent revenue? Okay. And that was for 398,400. That was our total amount of revenues, because we just had the one. So our expenses. Just gonna go through, look for the X's, advertising. Again, I'm just going through, looking for our expenses. That's all of our expenses. If anyone wants to add it up for me. Okay, one person, who said that? 265.
4,405. 405.
$265,405?
Yes.
Got it. So we have a net income of what? So 152,000?
132,000.
132,000?
995.
Everybody's keen now. I love it. Okay. 132,995. So let's pop one down to our statement of changes in equity. And we have Wyatt North Capital. We'll call it opening balance. That was for $415,780. So we can add our net income. We have no, it doesn't mention anything about investment, so we'll just add our net income of 132,995. And we can less our Wyatt North withdrawals. And we will get our Wyatt North capital I just did the math as I went and used a calculator, so does your numbers match this? Oh, 520,000, I guess. Yeah. Okay, so we have our closing balance. So let's do our classified balance sheet. So we'll start with our assets. What is our first category, subcategory?
Current assets.
Items that will be used or converted into cash within 1 year. So if we take a look at our assets, no, cash is our first one. Nope. Accounts receivable due 2020. So due in 3 years. Is that a current?
No.
Or notes receivable? Is that no? Office supplies? Yes. Prepaid advertising? I'm sorry, I guess brand name, no. Prepaid advertising, yes. Rent receivable? Yes. And you know what? I made a mistake already because I just read this note here. Assume that $215,000 of the long-term note payable will be paid during the year of March 31st, 2018. Also, $55,000 of the notes receivable will be collected by March 31st, 2018. So, part of that will be collected within, converted to cash within 1 year, so we'll just ax that total. $16,000. Oh, did I forget to write one of them down? Prepaid advertising. Oops. Yeah. Here, I'll just write that. I did forget. I said it, but I didn't write it. Okay, so we'll go with current portion of notes receivable. Scratch out this little line. They said that $55,000 will be collected within 1 year, so we can add that to our current assets. Now we just have to be careful. If $55,000 of this note receivable is collected this year, what is the new balance? That's $55,000, right? Because if we count for it twice, we won't balance. That's why I should always write with pencil in this class. What is our second type of category for classified balance sheet? Do we have any non-current investments? Do we have land for future expansion? Do we have shares in a company? Do we have a bank or a loan outstanding receivable? Yes, we do. So notes receivable. So our non-current investments. Then we have the 1, so we can put it right into the total column. Notes receivable. And how much of that, less the $55,000 that's current, we have $88,000. That is a non-current investment. What is our next type of asset?
Property, plant.
Property, plant, and equipment. So we have, first one I see is the building. And what do we need to put underneath the building? Your accumulated depreciation for the building. We got furniture. So on the exam, we don't put these lessons together. We put them right after the account that they are attached to. Do you have any other property, plant, or equipment? Land, yep. So again, what are the accumulated depreciation accounts called?
Contrast.
Contra asset accounts. So the total property, plant, and equipment.
Seven.
715,300. What is our fourth category in the classified balance sheet?
Intangibles.
Intangible assets. What are intangible assets?
Currency.
Yeah, they have no physical form. What are some examples of intangible assets?
Brand name.
Yeah, and we see everyone saw the one in here? The brand name. And that's the only one, so we can go straight to the total account. So what do we have for someone able to add this up for me, please?
Five.
I'll go with that. Sounds good. So we have total assets of 895,400. Go into our liabilities. What is the first category of liabilities? Current liabilities. So I'm just reading this note. Assume that 215,000 of the long-term note payable will be paid during the year. So for the long-term note payable, 215,000 is paid this year. What does that leave for the remainder? So what other liabilities are going to be paid within this year? Accounts payable. We're just going through looking for, see how much easier it is when it's already pre-organized for us? And we just go through and have a look. Interest payable, 900. I heard someone say salaries expense. Is salaries expense a liability?
No.
No. Salaries payable. Yes, because will anyone work for us if we tell them we're paying them in beyond a year from now? No. Would you work for anyone that did that? No. Now, every account is only being used once, whether it's the income statement, the balance sheet. So if you wanted to, you could be checking these off as you go to make sure they're all being used. I'm pretty sure they have been, so I'm not too worried about it. Any other current liabilities? Yep, our current portion of note payable. That was 215,000. Again, in this example, I'm just putting a line underneath the totals here and putting the total here. You can write total current liabilities and put the total here. That is also, both methods are totally fine as long as you're using the right columns. So what do we get for our total current liabilities? $227,625. So what is our second classification or subcategory of liabilities? What do we have for non-current liabilities? Yeah, exactly. Long term. Again, don't make the mistake to take the full balance because you won't balance, right? If you're going to make some of it current, you have to make the other non-current. You can't make some current and then take the balance again. So that leaves us with 147,000. It's the only non-current liability, so we can pop it in the total section. And is that all of our liabilities? It is, yeah. So we can add up our total liabilities. And what do we get when we add these up, sorry? 370. Okay. Okay. Let's get into equity. And now we've done all the work just to have one line in equity, right? Because we've already included the withdrawals. We've already done our income statement. We've used that net income to adjust our balance. We've also used our withdrawals. By doing this, it's really the exact same thing we do when we do our REID closing entries, right? It's the exact same math. It's just presented in a different way. So we're doing it just a different way, just so hopefully you can understand the flow through of accounting. So our Wyatt North Capital, we can get from not from our trial balance because we've already changed this, right? We've determined that it's 520,775. And we have total liabilities and equity. Now it's the moment of truth. Zero, 4, 5, 9. Look at that. And it balances. If it doesn't balance, you need to go back and fix your mistakes. If it doesn't balance, you've got it wrong.